Bloomberg Audio Studios. Podcasts, radio, news.
How would you describe the state of the housing market in your city right now in one word?
In one word?
Nuanced.
Good and bad.
Weird.
Those were the voices of real estate agents I talked to in a few major U.S. cities. And while there's no single perfect word to capture the vibe of the housing market this past season, the data itself is clear. This spring, across the board, people aren't buying and selling as much as they normally do.
I think spring was just a time of turmoil.
Colin Wainwright is a real estate broker in Nashville, Tennessee.
So what we ended up seeing is a little bit of a freeze, a little bit of flattening out. A lot of buyers are still feeling locked out.
April through June is usually the busiest time for the real estate industry, when the school year is ending and families are itching to move before everything starts back up again in the fall. But this May, the number of Nashville homes sold was down 16% compared to last year, according to the real estate brokerage Redfin. Sales ticked up slightly in June. But Bloomberg's U.S. housing reporter Prashant Gopal says there's an even grimmer picture for home sales emerging across the country.
I looked at the spring season, and that was the lowest since 2012.
His one word to describe the market?
Weak. I mean, actually, you could say it's the weakest housing market since the wake of the great financial crisis.
When it comes to real estate, people always talk about whether we're in a buyer's market or a seller's market. But Ansley Stokes, a realtor in the Washington, D.C. area, says this spring freeze has left everyone frustrated.
In a slower market like we're in now, and both parties can sometimes feel like they are losing.
I'm Sarah Holder, and this is The Big Take from Bloomberg News. Today on the show, a stalemate in the American housing market. How unaffordability and uncertainty have combined to slow down U.S. home sales. And what could get people moving again. Buying a house in the U.S. has become more and more of a pipe dream for many Americans. But Bloomberg's Prashant Gopal says there were signs that the country's punishing housing market was starting to get better, at least for some buyers, at the beginning of this year.
We saw more people starting to list their homes again. We saw inventory as a whole started to rise. And then mortgage rates, ticked down slightly. So all of that really looked positive. It looked like we were finally beginning to break out of this cycle, but that didn't quite happen.
Because just as things were looking up, the economy started feeling the effects of Trump's first few months in office.
Those inventory levels rose, but buyers didn't show up. And, they didn't show up because there was a lot of chaos in the economy.
The Trump administration's cuts to the federal workforce continue.
And the move sent Wall Street plummeting.
Small business owners are terrified over what's next after President Trump's tariff announcement.
It was one thing after the other, and I think a lot of buyers just were spooked by the whole thing. That's the big change this year.
We track the absorption rate. It's basically what percentage of the available inventory is getting taken off the market by buyers in any given 1 month period.
That's Ansley Stokes, the realtor who works in the Washington, D.C. area.
The higher the absorption rate, the stronger the market is from a seller's perspective. So we've seen that absorption rate kind of steadily fall off since the beginning of the year. And it has largely dovetailed with the election and with all of the changes coming down from the federal government.
Cuts to staffing in Washington hit the D.C. area especially hard, with its high population of federal government employees. But the rest of the U.S. felt the impacts of the new administration's policies, too.
Buyers, they're up against worsening affordability, but in the background, there's also uncertainty with the trade war and just the overall economic situation, federal layoffs in the tech industry.
Daryl Fairweather is the chief economist at Redfin.
A lot of buyers just aren't feeling like now is the right time to commit to a really big purchase.
The median home price in America was over $400,000 in April, and mortgage rates have been hovering around 6.8% for much of this year.
Home sales are near record lows, and that's because there are so few buyers out there.
If fewer sales are happening, you'd think sellers might bring down prices to help attract buyers. Is that happening?
Well, instead of bringing down prices, sellers are just like kind of taking the ball and going home. They're staying put instead of participating in the housing market. They don't feel like it's worth it to lower their price because if they were to re-enter the market, they feel like they couldn't afford to buy the same kind of home that they're in.
Some of those would-be sellers also locked in low mortgage rates during the pandemic, like Prashant.
I have a 2.3% mortgage rate.
Wow. I'm sure a lot of listeners would be jealous to hear that.
To get me to get rid of that 2.3% rate and take on, wherever it is now, 6.85% is not going to be very easy. So for me to sell, I have to really have a good reason to sell and buy something else. It's called the mortgage lock-in effect.
And Ansley, the DC realtor we heard from earlier, says that cycle of sellers feeling locked in and buyers having limited options can be demoralizing.
For sellers, looking back over the past, 5 years and watching how quickly everything sold. And it seemed like everybody who listed a house got multiple offers and the sellers got everything that they were looking for. And so now all of a sudden sellers feel very beat up. They're feeling very defensive. They think their properties are selling for less than they should be. So that causes a lot more friction in a transaction.
Sellers looked at this market and they said, wow, this kind of sucks.
So to paint a picture, prices are still high, mortgage rates are still high, sales are way down, and new listings are starting to retreat. And that's created sort of this perfect storm.
Yeah, I think that's true. There's certain reasons why people have to sell in any economy, right? If you get a divorce, if you have a kid, if you have to move for a job, those people will move no matter what's going on. But there are other people who can choose to move or not move. Those are the people who might be pulling back right now in terms of listing their homes.
So what's going to thaw out the frozen U.S. housing market? That's after the break. We've talked about what's keeping U.S. homebuyers and sellers in a stalemate right now. High prices, high mortgage rates, and a rocky economic outlook. But what could turn things around? Bloomberg's Prashant Gopal says would-be buyers and sellers are holding out for one of those things in particular to change: mortgage rates.
A lot of people are talking about this magic 6% rate, which, I don't know how true that is. Maybe there is some magical rate that if it drops below that, psychologically, that's enough to get buyers off the fence.
This week, the Federal Reserve chose to hold interest rates steady, which means mortgage rates likely won't change dramatically unless there's a major shock to the economy. At the Fed meeting on Wednesday, when Chair Jerome Powell was asked about what his rate decision meant for the housing market, he pointed to another issue beyond rates.
We haven't built enough housing. This is not something the Fed can help with, but then that'll be the case even after things normalize.
And Powell is right. Even if mortgage rates do come down, the U.S. is still short some 4.7 million homes, according to Zillow. I asked Daryl Fairweather at Redfin about this. What role does increasing housing supply and increasing that inventory play in getting out of this stalemate?
Well, new construction is playing a much bigger role in the market than it has, in the last decade. Because of the fact that there are so few existing homes for sale, many people are turning to new construction. In terms of new construction single-family homes, those tend to be the most expensive because they're brand new, they're going to cost more. And for a first-time buyer, it's oftentimes like too big of a hurdle to go straight to that new construction home. Most people choose starter homes that are existing homes. But new construction of dense housing, like missing middle housing, like townhomes, duplexes, can really do a lot to make that entry point more viable for a first-time buyer.
Some cities and states around the country are doing things like loosening zoning restrictions to try and encourage construction of that missing middle housing, essentially homes that are somewhere between a single-family home and a high-rise building. And there are efforts to address the housing crisis at the federal level, too. Just this week, the Senate Banking Committee advanced legislation meant to spur more housing development and make it easier for Americans to access loans to buy and repair homes. The bill will face House approval in the fall. But Daryl says supply is always just one part of the puzzle.
I think all of these solutions are going to be really helpful. Part of the problem is that with high interest rates, it's really expensive to build that kind of housing, and people have a lot of their equity locked up in their homes. So if mortgage rates were to fall, it could actually help development as well. So that's one reason to hope for lower interest rates.
It can take time for these long-term efforts to pay off, for policy changes to pass, or for new construction to break ground. In the meantime, the real estate agents I spoke with are seeing their clients react to the realities of the housing market as it stands now.
We're seeing a record number of price reductions from a list price perspective, and then we're seeing additional price concessions once negotiations start.
DC area realtor Ansley Stokes says sellers are finally starting to meet buyers where they're at. Her advice to those sellers? Set realistic expectations.
It doesn't matter that a year ago that the similar house sold for 10% more. That is not the market today.
Everyone's used to the COVID market where, sellers could put a house on the market and get anything they wanted for it.
That's Christina Kipping, a real estate agent based in Tampa.
I just got a buyer under contract, fully executed this morning. And with them, we weren't going out first weekend making offers. That's not happening anymore. Buyers are looking at houses. If they like it, they may go back 2 weeks later after they've done full-on research of the neighborhoods, the schools, walkability. I just see buyers are being a little bit more patient.
But not everyone can afford to take their time.
There's an old adage in real estate about all the D's that drive real estate purchases.
Colin Wainwright from Nashville again.
You have death, divorce, diapers, diamonds, debt. All of these things are life events that drive the real estate industry forward and make people need to have a change in their housing needs. And so a lot of people who had been sitting on the sidelines when the rates first jumped up, they may have been able to wait for a little while, but a lot of times those Ds can't wait anymore. And so the market has to churn forward.
This is The Big Take from Bloomberg News. I'm Sarah Holder. To get more from The Big Take and unlimited access to all of Bloomberg.com, subscribe today at Bloomberg.com/podcast offer. If you like this episode, make sure to follow and review The Big Take wherever you listen to podcasts. It helps people find the show. Thanks for listening. We'll be back tomorrow.